Hi everyone, I hope you are doing alright. Now we are going to look at the comprehensive example. You might have observed in the previous video lecture that I was using different notes. Now them notes were F6 notes. Exactly same material is given to us in our P6 notes as well, so you do not have to worry about it. Only short life assets are not, I've not included the short life assets in our P6 lecture. Reason was that it is not as important as it was in F6, so it is not important, as important as it is in the F6, so it is less important in P6. However, if you want to keep them, just note down in your notebooks in the previous video lecture when I'm sharing the screen. Alright, so you can do so, or you can just go to the F6 section and just download the F6 notes as well and just copy and paste from there, which is the short life assets. However, for P6 purposes, it is not as important as it is in the F6. It doesn't mean it cannot come up in the exam. That's why I've took the lecture from F6 notes so that you can see that as well. Anyway, so we are going to do the comprehensive example. If you come to P6 notes, page number 39, it is a comprehensive example. And this bit, column, these columns which I was referring to you again and again, we make different pools for different assets. So it is first year allowance, first of all, FYA, first year allowance, which is 100% on the cars which are less than 75 grams. Then it is annual investment allowance of £200,000 spent on the plant and machinery, first £200,000. Then if it is more than £200,000, then it will go into the main pool, and there are a few other things as well which will go into the main pool. Well, majority of the things will go into the main pool, which is rate is 18% per annum. Here at special rate pool, the rate is 8% per annum, and there will be few things which will be going here, one of which is car which is emitting more than 130 grams, and integral features of the building as well. Right, then after that I've listed down laptop with 10% private use. So the example which you are going to use now, there is a laptop with 10% private use, so that's why I've listed down here. So if the proprietor is using something privately, we will keep that asset separately. And there is car with 20% private use as well, so that's why I kept that as well separately. And finally, there is a column of capital allowance. Right? So that's how we make our capital allowance. Now, if we start reading the comprehensive example, keep your notes in front of you. I won't be sharing the screen because if I share the screen, we cannot do it on the board. Paul is a sole trader. The balance as at 30th of June 2016 for the capital allowance purpose was main pool is £20,000. That is our balance on 30th of June. Why don't we just start putting the balance here? So what is the balance? Balance in the main pool is £20,000. So £20,000 in the main pool. Special rate pool is £40,000. Special rate pool is £40,000. Then laptop £2,400. So £2,400 laptop. And then £8,000 is a car with 20% private use, so it is £8,000. Right? So that is our tax written down value. You can write down TWDV, which is tax written down value. Right? Now these are our opening balances which I have just copied from the question and pasted it here. Then after that it says during the accounting period ending on 31st of December 2016. Now read it carefully, 31st of December 2016. Now if it would have been ending on 30th of June 2016, then it would be 1 year long, 12 months long. However, if it is ending on 31st of December 2016, which tells me that these are only 6 months long accounts. If these are 6 months long, then we know that this 18% will be months over 12, and it will be 8 over 12. Likewise, annual investment allowance will be divided as well. However, for first year allowance, it will not be divided. Right, so it will be 6 months. Now here, if you want to do the rest of the question yourself, you can do so. However, if you want me to do it, you can just watch it. Anyway, after that it tells me that there were few purchases, so there are lots of purchases, and after that it tells me there was one disposal as well, which it says car with 110 grams CO2 emission used 20% privately by jams, £12,000. Now we know when we are selling an asset in the year of sales, there won't be any capital allowance at all. when we know there will be no capital allowance for the selling asset, why don't we just sell instantly? Why should we wait? So we can sell it straight away. So first of all, we will do the disposals. So less disposals or sales, less disposals, and we have sold this asset for £12,000. Now there will be balancing allowance or balancing charge thing. Now if you see here, the balancing amount, the remaining amount was £8,000 here. However, we have sold it for £12,000, which means we have made a profit. When we have made a profit, it is telling me that it is a balancing charge, right? So how much is £4,000 will go into the capital allowance section. However, if it is £4,000 which is going into the capital allowance section, but please remember there is a 20% private use, which means I only have to take business use, which means I will do it 80%, right? So I will do it 80%. So 4,000 into 80%, whatever the amount is, it will go into the capital allowance section. I assume it will be £3,200, right? So that is £3,200. Although I have filled the ink in my marker, but it is still not bold. Anyway, I've put it in negative. Why? Because there will be positive figures, all of them. However, because this amount 4,000 was negative figure, so it will reduce our capital allowance. All right, our capital allowance will be reduced. Anyway, that was the only disposal. After that, there are few additions, not few, basically lots of additions. So first one is basically a car with 70 grams per kilometer CO2 emission, and it says that use of salesman is 10% private use. In this case, it is just confusing me that the salesman is using the asset for private use. Now, if the salesman is using, it is not a proprietor, so we do not consider that. So it will be 100% business use. Anyway, because it is a car less than 70 grams, which is telling me that it is a first year allowance, so I will just add it as addition to the first year. So if I add £20,000 here, this amount will go into our capital allowance as well, £20,000 straight away, right? Right, then after that, car with 150 grams per kilometer CO2 emission for business use. Then car with 150 gram will go into the special rate pool, and 120 gram will go into the main pool. Now let's put the main pools first. So additions in main pool. Additions in main pool. Now there is one car which will go into the main pool, which is £9,000. So £9,000 will go into the main pool as well. Then there is a then there is a van of £100,000 that will go into the main pool. The general plant of £200,000 that will go into the main pool as well. There is one computer as well, which is £12,000, so I will add that as well, plus £12,000. Alright, so this whole figure will go into our main pool. How much does it come to? 200, 300,000, 312, 321. 321. The 321 will go into the main pool. £321,000 will go into the main pool. Then we will add additions to the special rate pool. Addition to the special rate pool. Now before we do the additions to the special rate pool, we also have to consider the annual investment allowance. Remember, annual investment allowance will first be allocated to the special rate pool, then to the main pool, and then to the short life assets. But there is no short life asset in our question, so we do not have to worry about that. So anyway, addition to the special rate pool. First £200,000 spent on the plant and machinery is eligible for annual investment allowance. So excuse me, and we will first do it for the special rate pool. So if we see in the question, There's a lift for office building which are £250,000, solar panels for building which are £150,000. So these are the only two things which will go into the special rate pool, and there will be one car as well worth £10,000 which will be going to the special rate pool. All right. So if we just addition to the special rate pool, so if we just do the £250,000, £250,000 plus it's £150,000 plus a car of £10,000. Right? So 250, £400, 410,000 pounds. So 410,000 will go into the special rate pool. Right? So 410,000 pounds will go into the special rate pool. Excuse me. Now, out of 410,000 pounds, we have to consider the annual investment allowance. So there will be annual investment allowance. Now, annual investment allowance is 200,000 pounds for a year. However, in this case, these are only 6 months. So for 6 months, it will be only 100,000 pounds. So if we take 100,000 pounds out of this one, so we'll take 100,000 pounds out of this one, it will go into the annual investment allowance, 100,000 pounds, and this will also go into our capital allowance section, the same amount, 100,000 pounds. So that is our first annual investment allowance. Excuse me. First 200,000 pounds spent on plant and machinery is eligible for annual investment allowance, but this 200,000 pounds is for a whole year. If it is less than 12 months, then we will do accordingly. Alright, so that is our annual investment allowance of 100,000 pounds. Now if I just put this one here, it will be even better. So that is our annual investment allowance. Right? So that is 100,000 pounds. Now after doing that, is there anything else left in the question? Computer is added as well. 12,000 is added, isn't it? 12,000 in the main pool is added. Then 150,000 pounds of solar panel is added. 250,000 will go into the special rate pool as well. Then 200,000 pounds has gone into the main pool. Van is gone into the main pool as well. Then 120 grams car is going into the main pool. 150 grams car went to the special rate pool. Then 70 grams car went to the first year allowance. Right? So we have done almost everything. Reason I did not proportionate it, the reason I did not do it on the pro rata, was that it is instructed to us in the notes that first year allowance, doesn't matter how long our accounting period is, we will keep it 100% the first year allowance. Excuse me. Now we have to take the writing down allowance. So we will do the writing down allowance of 18% into 6/12, because this is for 6 months. This is 6 months worth of accounting period. Right, so we will do that first, then writing down allowance of 8% per annum multiplied by 6/12. Now this one will be on the special rate pool, whereas the earlier one will be on the main pool. Right, so we'll take 9%, basically 9% of this figure, 321 plus 20,000 pounds. So whatever this amount is, it will be deducted. So if I do it on the calculator, if you just bear me 1 second, let me just open up my funny calculator. Please, you do so as well on the calculator. While I'm doing the question, whatever the calculations are, please always do it on the calculator. Just make yourself comfortable with your own calculator. It will save you some minutes in your exam. So it is basically 341,000 times 9%. It is 30,690. So it is 30,690. It will be deducted from here, 3690, and it will be added in our capital allowance. So 3690. Likewise, 4% will be our writing down allowance in the special rate pool. Total balance of special rate pool is how much? 100,000 is deducted, 310 and 40, 350,000 pounds. So 350,000 times 4%, 14,000 pounds. So 14,000 pounds is deducted. Hang on. 14,000 pounds will be deducted out of this one as well. And 14,000 pounds will go here. Right? Now only one thing is left in the question, if you have noticed already. Laptop with 10% private use. We also have to do that one as well. Now laptop is at the rate of 18%, because if it would not be in this case, in this section, it would have been in the main pool, right? So it will be at the rate of 18% per annum, which in this case will be 9%. So we'll do 2,400 pounds multiplied by 9%, which is 216 pounds, right? So it is 216 pounds. Let me do it here. 216 pounds. But we only have to take 90% of that, which is the business use. We cannot take the whole use. We will only have to take the business use. So if we take 216 times 90%, it is 194. So that is our 194 capital allowance. Now as you have noticed, as you might have noticed, all the figures are positive except for this one where we have sold it on profit. So if we have sold it on profit, it will reduce our capital allowance. So whatever the total is here, whatever the total is, we'll have to add all of these. Whatever this total is, it will go in our trading profit and it will be deducted out of the trading profit. So it is basically our depreciation for tax purposes. Excuse me. Excuse me. Right, so that is our capital allowances. That's it for this video. I will see you in the next video. Then we will do the other bits and pieces. I assume that I haven't missed anything in this question. If I have missed anything, let me just make sure I haven't missed anything. So we'll actually just revise it. So there was a tax written down value which was given to us in the question, because there was only one disposal, and we know that when there is a disposal, we do not have to do any capital allowance. So that's why I've deducted the debt disposal first. So it was straightforward. Only complication was that we only have to take the the business proportion. We do not have to take the private portion. After that, there were a few additions. First, we did the first year allowance, which we know if the car is less than 75 grams per kilometer, then we will do it 100%. Doesn't matter how long is our accounting period. Then additions to the main pool, so we have added all of them into the main pool. Then addition to the special rate pool as well. So we've done that as well. Now before adding the additions to the special rate pool, we could have done in a different way as well. We could have put 100,000 here first, then the remaining bit would have gone to the special rate pool. We can do that as well, but this method is also the same, doesn't matter. Right, now into the special rate pool, the rate is 8% per annum, which will be 4% in this case. And likewise for main pool, the rate was 18%, whereas in this case it will be 9%, because these are only 6 months. Right, and after doing that, there was only one complication with regards to laptop. Laptop normally comes in the main pool. However, because there was a private use, so we keep the assets with the private use separately. We only have to take the business proportion, so that's why I only took the 90%. Right? So that's how we calculated our capital allowance in this comprehensive example. I hope to see you in the next video, and we will continue with our journey of a CCA advanced taxation. Goodbye.